Hi, this is Ken Lake with MAC's Technical Market Comments for Thursday, June 15th. We'll start with July corn tonight. We ran right up against our objective of 392, the previous contract high that we'd set back in February and March, and the market gave us that just a week or so ago, collapsed from there. It kind of gave us the idea that we might go a little higher on a hot, dry forecast, but the forecast turned wetter, and we have been receiving rains throughout the Midwest to cause this a little bit of a bearish backlash here. So now we're just trading back toward the kind of the mid-range of this channel that we've been in here since the first of the year. I don't think we're going to trade a lot lower in here, just simply because acreage is down, usage is okay. The market funds are short, and we've seen some short covering on these breaks. So we'll see if these guys want to build a long position going into the 4th of July or not. But for now, we should call support at about 374. Downside risk goes clear back to 363, and if we break, then we would see some downside risk into the 350s. But for now, I don't think we're going to go there. Likewise, in December corn, a break from those highs. For customers that we have been fairly aggressive sellers in this $4, $4.05 range, we got to do that again last week and made some sales. And for customers that have those sales on, we are targeting 420, the old contract high, for additional sales. Now, the timing on this would be important because if we continue to see these rains come through the Midwest, then we might get a little more bearish corn, but probably not until after mid-July. Certainly 4th of July weekend would be an important time for the funds to build a long position into that area here. So don't look for a break in these corn prices until pollination weather is more clear. Again, kind of mid-range on the momentum indicators, so it tells me that 390 is probably support for D's corn for a while. Long-term support down around 360, but I don't think we go there at least until the corn gets pollinated, and then final growing season weather becomes a little more apparent. Soybeans, you just have to take a bearish stance on. A week ago, or at least at the end of last week, I'd put a video up talking about this apparent bear trap that I thought we were getting ourselves into. When we see a big drop like this, continued drop like this, then everybody's convinced that things are bearish, and analysts will be telling customers to sell, and then of course we had a big run up subsequent to that, just based on hot, dry forecast, and it looked to me as if we were going to blow through that 944 level. And keep in mind, this was a Friday sort of analysis with a weekend coming up. You come in on a Monday morning and we are continued hot, dry, then this thing would have blown up and went higher. However, the forecast was not that way. We had gotten some rain over the weekend in the Midwest, and things turned around from there. So a continuation of the bearish trend in soybeans is here. Stochastics getting a little bit overbought, actually, at this point. Still not showing us a sell signal here, but anybody that owns old crop soybeans has to be fairly defensive here and protect that by selling any sort of rallies. We are not bullish soybeans at this point. Likewise for November soybeans, any sort of market strength should be sold. Overhead resistance at 950, support's going to be down here at the longer term 907, and we would be sellers of any sort of market strength there. Over in July wheat, July 17 wheat has, we think we've put a bottom in here at 421. Support's going to be 435, trading right around this 440 range. So our recommendation has been to simply set aside this wheat market and wait until the harvest period to make sales. Now, for Ohio and Michigan, that means around the 4th to the 10th of July is when our harvest is going to be at hand, and we will likely sell that wheat right off the combine. Market carry will not dictate that people pay, will not equate to a very reasonable DP charge, storage charge anywhere. So only if you have on-farm storage might you consider storing wheat. Otherwise, we'll be recommending that you turn this stuff into cash.